Hello, good afternoon, guys. Welcome to MK Convenience Brokerage. My name is Mohammed, and today we're gonna go over part two of the property and casualty insurance exam. So basically, part one was just basically dry. I'm just going over some dry parts. Unfortunately, for the first one or two chapters. The reason I say dry because it's really very hard to pay attention because it's like very boring terminology and everything. But guess what? Some of these questions they will be asking from these boring terminology. One thing keep in mind if you're obviously looking at the slides right now and reading through it, the purple ones that are highlighted are very important. So keep that in mind. Always read the ones with the highlighted ones. Obviously, I made notes for myself when I was taking the exam, so obviously I want to do the same thing for you guys. Look at it, take notes, whichever one is most important, and obviously keep that in mind. It is boring. I might not be a little bit clear on certain parts because unfortunately the part is so boring. So it's very hard to understand. But I'm gonna try my best to keep it joyful as possible. Per like that. So let's get started at C, state regulation background. So the purpose of state insurance regulation is to provide the welfare of the general public and protects its interests. This is accomplished by. So what does this mean? So basically, the insurance regulation, the state insurance regulation, is basically to making sure the people that they're doing business with, obviously, let's say for example, a agent or broker doing business with the insured, are making sure everything is good on that part. For example, the policy forms, reviewing insurance rates, describing and penalizing unfair claim practices. All these things they want to let you know about that. Keep that in mind. A major component of solvency is rate adequacy. If rates are exorbitant, the consumer suffers. If rates are too low, insurance suffers. So basically, in a nutshell, it's basically they have to give you an insurance broker or an agent, but have to give you, and also the insurance company should be put at it. They have to give the consumer, which is the public, a reasonable rate. They can't charge you too much, and they can't charge too low. They give you try to be reasonable as possible. So keep that in mind. Since an insurance claims practices seriously affects the general public, they are closely monitored by the insurance department. So obviously those insurance companies and mostly you can say insurance companies are doing it. They are really monitored. They have to go through rigorous like checks from the state government and insurance companies and everything to making sure everything is good so far. As you can see, I'm not gonna go over every part of the page. The reason is because I try my best to go over the important parts of the thing. Unfortunately, if I start going everything reading line by line, it'll obviously the video will be like an hour long, and it's only like a couple of pages. So I'm not gonna do that. So I'm gonna try my best to skim through it, and I'm gonna try my best to see which one obviously is the most important part. Again, I'm not gonna read every one of my highlights. I'm not gonna read every part of it. I'm gonna go over and see which one is obviously the most important part, and I'm just gonna go over with you guys. Each state has legislation and enact laws which impact every phase of an insurance operation. Every obviously state has their own insurance laws and regulations. So whatever state in the United States you live in, just follow that state insurance regulations. The judicial branch's influence is profound. The new policies interpreted by the courts, older policies are interpreted in light of the changing world which they address. In a nutshell, what this means is this. Whenever something happens, it goes to the news media, or if it goes to court, Supreme Court, they make a new law, they make new rules or regulation. Basically, that's what it means. So keep that in mind. Again, finally, each state has an insurance department and executive branch headed by a commissioner and a superintendent, which administers insurance laws and supervises the insurance industry in that state. That is important. Just keep that in mind. You have to know it's headed by a commissioner or a superintendent, which administration insurance laws and supervises the insurance industry. This can be a test question, but we'll leave that up to you. It's always best to know. New York regulation. New York State specified regulation include consumer privacy regulation, producer compensation transparency, and financial fraud and consumer protection unit. The New York Consumer Privacy Regulation is the Title V of the grant leased by the Act, requires financial institutions, including insurers, to protect the privacy of consumers and customers. That is a test question. Most of the time they might ask you, they might not, but keep that in mind. This is very important. They basically protect the insurance consumers and customers of any privacy laws and anything like that. As a result, the New York Consumer Privacy Regulation has been enacted too. I'm going to go over the book of the circles. Describe the condition under which a license may disclose non-public personal health information, non-public personal financial information about individuals to non-affiliated third parties. So basically what this is you can't give information out to any other person. So let's say, if you, for example, the insurance companies, if we're brokers, they're held to a higher standard. They have your privacy, they have your social security number, they have your license, they have everything. So they're held to a higher standard. Basically, what this is making sure they don't use your information to a third party without your consent. Basically, what this is. Going to the next page. 10. Compensation. Compensation means anything of value, including any of the following, whether paid as commission or otherwise. It could be money, credit, loans, interest, or premium, forgiveness of principal or interest, trips, prizes, or gifts. These are all considered compensation. I will know what a compensation is. Obviously, not only for, as an insurance agent or broker, but as a regular consumer as well. You need to know how compensation is. A purchaser means a person or entity to be charged under an insurance contract or a group policyholder, and may include. What is a purchaser? Simple as that. When you buy an automobile policy, when you buy a home, your name is on it, you're the purchaser. It could be a third party, it could be an LLC, it could be under a branch, whatever it is, that is a purchaser. A purchaser does not include, this is in black highlight, keep that in mind, a certificate holder or member under a group or blanket insurance contract, unless the insurance producer has direct sale or solicitation contact with the certificate holder or members, and the certificate holder or member pays all the premium. That is not a purchaser. Insurer means any person or entity doing insurance business in the state. That's simple as enough. And any insurance producer selling an insurance contract must disclose the following information to the purchaser orally or in prominent writing at or prior at the time of the application for the insurance contract. So keep that in mind. Whenever insurance broker or agent sells you something, there's always something in mind, either in writing or oral. So keep that in for your record. This happens most of the time. Going to page 11. Again, I'm gonna keep this in mind. I'm gonna go over certain things. Let's choose that if the purchaser requests more information about the producer's compensation prior to the issuance of the insurance contract, the producer must disclose the following information to the purchaser in a prominent writing at or prior to the issuance of the insurance contract, except that if time is of essence to issue the insurance contract, then within 5 business days. I will remember these dates. 5 days, 10 days, anything at all, you have to remember that. These are something that you usually do ask in the test questions with days. So it's always best to remember those days, what it is. It helps you out, especially in the test. If the insurance requests more information about the producer's compensation after the issuance of the insurance contract, but less than 30 days after issuance, then the insurance producer must disclose the purchaser in a prominent writing the information just discussed within 5 business days. This is something also is always good to remember as well. This can be a test question. Keep that in mind. The insurance producer must retain a copy of any written disclosures provided to the purchaser for not less than 3 years after the disclosure is given. This is something they did ask me during my test, if I remember correctly. This is something that I would highly recommend to remember. Again, the insurance producer must retain a copy of any written disclosure provided to the purchaser for not less than 3 years after the disclosure is given, unless the insurance producer has a written agreement with the insurer that the insurer must retain such a copy. The regulation does not include all these items listed. Keep that in mind. Remember, there's a 30 days right over here. So you have to remember these days, and 5 business days over here. Keep that in mind. Financial Fraud and Consumer Protection Unit. The superintendent, keep that in mind, the name superintendent, has established a Financial Frauds and Consumer Protection Unit in the Department of Financial Services to investigate and prevent fraud and any other criminal activities in certain specified areas of the banking, finance, and insurance industry. So again, it's the superintendent that controls this. Those two, all the way on the bottoms, this is a penalty for not imposing a $5,000 fine and the amount to claim which the producer defrauded from the innocent party. So keep that in mind. Again, numbers, again, things, it's $5,000. Broad powers. It is intent of recent legislation that the superintendent supervises the business of financial products and services, including any person subject to the provision of the insurance laws and the banking law. Keep that in mind. Number 13. The superintendent must take such action as he or she believes necessary to. All these are obviously superintendent's necessary actions need to be taken. Keep that in mind. You read through it. Obviously, good to know. The head of the superintendent, the head of the department is the superintendent of financial services. Again, like I said, who is appointed by the governor. That you have to know. It is appointed by the governor, and obviously their duties. Some of the unique undertakings of the Department of Financial Services include banking development, captive insurance, Holocaust Claim Process Office, and Liquidation Bureau. All these are under the Financial Services of the Superintendent. As Chief Executive Officer, the New York State Superintendent of Financial Services has the power to, so these are the powers of the Superintendent as well, administer the department's work, appoint or remove officers and other department employees, perform the duties of the department through various divisions, and organize the work of the department. This is commenting in mind. A superintendent cannot, however, cannot create insurance or banking laws. This task is only responsible to the legislator. They cannot create laws. They have to follow it, they have to implement it, but they're not allowed to create it. So keep that in mind. Examination record. This is something that you have to remember. Each domestic insurance must be examined in detail every 3 years. In addition, the reserve liabilities include loss adjustment, expense reserve of each domestic insurance must be examined annually. The superintendent must examine insurance applying for initial certificate of authority to transact insurance in New York. Again, it's a certificate of authority to in order to conduct a transaction in New York City, or to New York in general. The superintendent may conduct hearing on insurance matters as well as conduct investigations. That's the job of the superintendent. Administer or interrogate license and others, and issue subpoenas. This is all part of the superintendents. Page 15. Penalties. Individuals found of violating any insurance rule or regulation may be subject to license revocation and are fined up to $500 per offense and up to aggregate of $2,500. Again, I have a star next to it. This is something that you need to know about penalty. That's part of it. Insurers as well. What is it? Insurance companies, also known as insurers, are typed or characterized in many ways, including by organization, geographic information, marketing system, and authority to do business in a state. These are all part of insurance, or also known as insurance companies. Going to the next page, page 16. Authorized and unauthorized. An insurance company licensed to do business in New York is said to be authorized or admitted in the state. Conservatively, an insurance company not allowed to do business in New York is said to be unauthorized or non-admitted. These are something that I would actually try to memorize, because it's something that can ask you in the insurance company. A domestic insurance in New York State. New York is an insurance company formed under the laws of New York. A foreign insurer is an insurance company formed under the laws of a United States jurisdiction other than New York. An alien insurer is an insurance company formed under the laws of a country other than the United States. These are three main ones. Keep that in mind. They do ask questions from this. It's very tricky, but if you know what they are and what they're not, it's going to be easy for you. Again, domestic insurance, if you live, let's say for example, domestic, keep this in mind. We live in New York State, so domestic. Outside, it's automatically going to be foreign. Outside, the United States is going to be alien, like people when come in the United States. Keep that. This is how easy to remember this is, because if you think about it too deep, you're gonna end up confusing yourself with all three. Okay, yeah. Let's go to the next page. Page 17. A stock insurance company is an incorporated company which is capital divided into shares. Stock insurers are owned by the stockholders. This is very important. Keep this in mind. They do ask, sometimes they don't in the test, but you have to remember that. A mutual insurer is an incorporated company without permanent stock and owned by its policyholder. Know the difference between stock and policyholder. Stock and mutual insurance. A fraternal benefit society is an incorporated society under or supreme lodge without capital stock, conducted solely for the benefit of its member and the beneficiaries, and operate on a lodge system with a representative form of government. Going back all the way down, Lloyd's Association, remember that as well, are based on famous Lloyd's of London syndicate, whereby individuals join together and insure a risk which are usually very large, and an unusual member of the syndicates are personally liable for loss. Keep that in mind. It's something important just to know. Page 18. Financial statuses. Certain insurance companies are rated. Like I said, it's like all a rating system. Based on these evaluation, you can see on the bottom, A plus, A minus, B plus, B, C plus, C. I mean, it's kind of fair to say what it's like a basic grading system in high school. So that what it is. So I mean, it's not really a test question they ask you, but it's just good to know. Because especially if you're going to be working in an insurance field, it's very good to know. Final and last page of part 2. Transaction insurance includes soliciting insurance business, negotiation or binding policies of insurance, communicating with insured concerning insurance policy, and transmitting funds between insured and insurance. Going back, a binder is a temporary contract of insurance issued by an agent until the insurer can evaluate the risk and either accept or reject coverage. This is something that I actually highlighted with the yellow thing, with my marquee, and it's good to know. Going all the way in the bottom, limitation on the power of an agent. In general, any property in casualty, life, accident, health, agent power to represent his or her is limited by the following: express authority, implied authority, and apparent authority. This was actually a test question as well. Express authority is authority that he or she expressly or specifically received in a contract with insurance. For example, binding authority would be an express authority, it granted by an insurer. Well, I am done with part 2. Obviously, if you guys feel confused in anything, I really apologize. This is, again, it is a confusing part 2, but it does get interesting when you go on, because then you start going into depth of insurance. But again, they do ask 5 to 8 questions approximation from this from the first chapter. It's always good to know. Like I said, some questions they do ask you is kind of like, why did they even ask me? The answer looks very simple, but it's a very, very complicated test, to be honest with you. I really highly recommend studying for this test. With that being said, thank you again, guys, for watching this video. Hopefully you guys enjoyed it. If you guys have any other questions, comment, concern about part 1 or part 2, please comment, like, subscribe. I'll try my best to help you out as much as possible, clarify any confusion you guys have. Thank you again, guys, for watching this video. Hopefully you guys enjoyed it.